Welcome back, folks. You are looking at a chart of gold. This is a 1 hour chart, and I've closed my position that I took earlier on in Asia. Okay, I've just closed it now and journal that, so that's there. And I have closed, I've got one position that I've left open at the 5 lot. Okay, so I will look at that on Monday, and I'll probably close that out. I'm still looking for 2400 to be hit. Okay, I've shared most of my trades on Friday, and you need to go and watch the analysis video that I posted earlier on in the day, where I spoke about where I felt the market was going. This level here was key for me, 2383, so we've achieved that. Those trades have all been locked in. I did a fair bit of trading on Friday. I like to trade every session, so you'll see on my Twitter profile, I have logged the New York session trade. That was at 2383 target, okay? I logged the London session trade, and I broke this down for you on a 1 minute chart, so there's a lot of good lessons in that, and that's posted in this video here. That was all based on the London trade, okay, on a 1 minute chart. You can see the timing for the entry is key, right? Entry at 2:30, and identifying where liquidity would be residing. So traded that up live for you. Make sure you watch that video. And the Asia trade, I also did a live trade on a 1 minute chart as well. Okay, make sure you watch that. That's this trade here. That there is the 9:30 p.m. Asia session long trade into this order block up to the resistance level, which is this bearish order block. Okay, there's a great video on this trade. I don't know if that's the exact chart or might be earlier. Anyway, go and find it. Let me see. Let's see if we can find that, if I did post that chart or not. There's a really good video I did on that 1 minute chart entry. It's probably this one here. Okay. I thought I did post yeah, this is the one. This is the chart for that 1 minute entry. Okay. I spoke about this very, very high probability entry technique. So watch that trade where it's coming into a key support zone that I've discussed on the video. This is a market maker buy model trade. Okay, look at the video, make sure you watch it. You've got to study the video. That's why I put them out there for you, and look at the charts and try and replicate what I am showing you on the video in your own charts. Okay, it's for your learning experience, so that you can understand the key times, the key price levels, how I establish those key price levels, and how I'm establishing and identifying the key targets. Okay, earlier in the day, you can see very early in the session, I identified the draw liquidity. This is way down at 2360, where I've anticipated to move all the way up to 2400, and we can see we're almost there. Okay, there will be some, expect some resistance here at this level, so the market will definitely have a reaction there. Okay, but I do believe that 2400 or very close to it will be hit. Okay, so keep an eye on that on Monday. Okay, and make sure you go through everything I've posted on Friday. Friday was an important day. I was in the mood to teach a lot on Friday, so I've done multiple trades throughout the day. At each session I like to trade, one in Asia, in London and New York. Some may say and feel that I'm over trading, but that's how I keep myself in sync with the markets. Okay, I've journaled almost every trade that I've done on Friday. Okay, so this is a 1 minute entry that I did live for you for your learning experience. Where are the others? That was in Asia. This was the Asia trade. This was an early Asia trade that I did, that I spoke about prior in my analysis video. I also mentioned what I'm looking for. Okay, so there is a analysis video right here. This is the first video that I did on Friday, where I talk about what I'm expecting on Friday, and then throughout the day I have traded in alignment with my expectation based on what I see in the charts. Okay, and so I had two trades in Asia, one on a 1 minute chart that I recorded live for you, and another one at 9:30 p.m. session trade. Okay, and then the London trade, again, I recorded this live for you on a 1 minute chart. Have a look at that. I did a video, so there's a video for that one, and then obviously the 2383 target. Okay, this was the New York trade. Okay, so we had news on the day, and that pushed us up to where we needed to be. And then I've held some positions, and then I've just closed out now. Not now, but on Friday prior to the market closure, because I did want to hold over the weekend. And I've still got one on. It's a small lot, only a 5 lot. That's in profit. That I entered also. I think this was earlier in Asia, 2363. That price, 2363, was down here somewhere. Okay, so that trade I entered in Asia, I've kept that on, looking for that 2400. We may not get it, but that's fine. But that's what I'm looking for. Okay, markets don't give you, there's no guarantees in the market, so you just got to manage the trade. Okay, so let's now talk about and let me just very quickly show you. I show you this now, so you can see how I trade. These are all on Friday, right? These are all my trades on Friday. Majority of these I've journaled for you, and you can see them in my Twitter profile. This is one I closed. There's two that I closed on Friday prior to market closure. Anywhere where it's got 2386. There's that one, and then there's this one here, another 5 lot. Okay, I haven't journaled this one. So another good day for me. That's how I typically trade. Okay, that doesn't mean that's how you are going to be able to trade, but as I said, on Friday, I've journaled all my trades. I typically don't do that, okay? I typically only put up 1 or 2 trades, but I did it on Friday because I wanted you to see how I trade at every session until my objective has been met. 2383 was my key objective, so I continue to trade in every session in my direction, okay, from my early analysis. So Asia, London, and New York, I'll continue to put on those trades at the right times in line with my bias until I got 2383, and I've left some on until getting the higher objective of 2400. But then we got pretty close to it. We got 2390, but the market then obviously did not go any higher, and I didn't want to hold a whole range of open positions. So I closed out the ones that I was holding up to 2400, except for one that I've still got open, and I'll look at that on Monday. Okay. So as I said, what's next for gold? I'm still looking for that 2400. Now let's look at a daily chart. Okay. So higher time frame daily chart. You know, we've been coming down. Okay, we've taken out liquidity here, filling this gap. This was a daily order block, and we've had a reaction from there just to balance this gap. Okay, then we've gone down into this rejection block, and on a 4-hourly chart, there's another rejection block. On an hourly chart, there's some bullish support there that I've spoken about in the video that I did Friday morning on why that was a support zone, and we've had now this move up, which we have captured. I've captured the majority of that move, right? If not all, because I was long from 2363, which is all the way down here, and I've kept those positions and continue to trade up all the way up to 2390 or 2387, I think was my highest close. So this one here, 2386.7. Okay, you can see it's from 2363.93, so 2364. So this entire day, I've been able to capture. Don't need to be profitable, but as a pro gold trader, that's evidence of my understanding of price action for this market. Okay, so I think that for me, I do believe that the draw on liquidity will be this high. Okay, I am going to be looking for that. That is what I'm now targeting. Now we may still pop down into this level. Okay, so there's a lot of liquidity, a lot of stops under this swing low, but I'm not looking for shorts, right? So I'm not looking, even if we do make a move down to there, I'm not looking for that. For me, that'll just be an opportunity to buy at a discount. That's how I will view that. That doesn't mean I won't take any scalp short trades. I may, but I really want to be a buyer in gold, targeting these highs. Okay, and that could mean that I miss out on any shorts down to here if we do get movement down into there. There is liquidity there. There is a fair value gap there. There's a lot of money down there. If I was a market maker, I would go to 2400. Okay, then I would come back down here, and then I'd go back up here. But for me personally, I'm not looking to trade short as a target down to here, even though we make it down there. Okay, I'm only looking for longs in this market, and my target is there. So that's predominantly what I'm going to be looking for. I want to see how this market trades on Monday. Okay, I feel Monday we will go up and get to that 2400. Okay, and possibly have a pullback, maybe take out these lows. I mean, this low here is higher than that low, meaning that is a pretty low resistance liquidity objective. Okay, typically, normally you would see that this would normally come down and stop out anyone under that low, then go higher. Okay, so there is a chance that because that is a low resistance liquidity objective, because that low is higher than that low, the market could come down there and then also take out all these stops into this fair value gap before going higher. I don't really see that happening. If it does, that's fine. I'm not concerned. I'm not looking at that short. I am looking for longs for that objective there. Okay, so that's what I'm looking for gold. I really need to see how Monday trades, and just because I'm not concerned about going down there, it doesn't mean, and I'm saying I'm not looking for a short, doesn't mean I won't scalp any potential short setups. Okay, it all depends on what I see in the charts. Okay, now let's have a look at some of the other pairs. Let's have a look at what drives the market, and what drives the market is the dollar index. Okay, now I can see this is the daily chart, and I think we've now, the two questions I will ask myself that is where have we come from and where are we going? Where have we come from? We've come down, we've taken all this liquidity, okay, on a daily chart, and then completely rejected. Okay, so I think we are headed higher on the dollar index, and the first target would be back up to these two down candles. Okay, so right now this is showing me bullish price action for the dollar index, and that would mean lower prices on indices like Nasdaq or S&P's, Russell. Okay, that would also mean lower prices on foreign pairs like the euro, for example. So there's two ways that I may look for a trade based on this chart. One is going to be the euro. I don't trade these foreign pairs anymore. I used to, but I now predominantly just trade gold. But euro is a very heavily traded pair. This is a really nice bearish signature. Okay, we've come up, taking liquidity above. We've now completely engulfed on a daily chart. Okay, so that is a bearish order block. Okay, and we can see we've come back down. We've gone back into the bearish order block, come back down, broken structure. We've closed below this level, broken structure, completed this gap. This is the daily order block. So that's why we are getting a rejection, not rejection, a reaction. Okay, that's expected. Closing the gap into the daily order block, reaction is expected. The market will always trade support and resistance. So this here is key support. So therefore the market's reacted. It doesn't mean it's going to completely reverse from there. We're at the highs. So this here, if we look at the range between this low and this high, this order block, these two down candles, where the market's reacting from, I don't consider that an order block because that there between that low and that high, this is premium pricing. Okay, so if do I have any lines on here? Okay, I do. Let me just get rid of those. I'll just delete them. If I take, let me just check if that is a low here. What's the low here? This is 106.677. This is 106.661. So that low has taken out that low. Look how equal these lows are. Very, very clean lows there. You know, that is very clean. Okay, that would be the draw on liquidity. Okay, to me, that's where we are headed. How soon we get there, not sure. We need to watch what happens on the dollar index. So if I take this low, and I'm using just all I want to do is measure where's the midpoint. I don't need anything else. I'm not measuring anything else. Taking off everything else, and I just want to see where's the midpoint, where's the middle. And I like this to be yellow. Okay. So anything above that, to me, any bullish signatures above that are not valid in my view. That's how I look at the market. So I don't see that as an order block. Okay. Yes, we will always have a reaction from there because markets trade. That's how they trade. There's support and resistance. So we've had a reaction from there. This now, fair value gap, should be resistance. Okay. So anything in here is resistance, and then on a lower time frame you want to look for your bearish signatures. Okay, so I feel that euro's headed lower. My first target on this would be down to this gap here. Okay, this is probably a nice low to target right there. There's no fair value gaps here, so that would be kind of the first level, right there, where I would expect some kind of reaction from. Okay, if it goes through there, then probably here we would see, because that would be liquidity, a lot of liquidity residing under there. Okay, now this is all on a daily chart. You'd probably want to drop down into a 4-hourly chart to refine these, but I don't trade these markets. I'm just giving you my view from a higher level, higher time frame perspective. Okay, but from that to there, you know, can we grab 50 pips or so? That, you know, that's all we should be looking for. We don't have to grab the entire move. That's 120 pip range. You know, we could be just targeting these lows. Plenty of liquidity residing under there. I'm going to take off these lines so that we're not seeing too many things on the charts. Look at those lows there. Each one of these lows is higher. Okay, so to me, that, and even these two, all these lows are higher, and that is a great indication of low resistance liquidity residing under where we are now. So under here into this gap could be a good target. Okay, if I was trading this, I'd look for the easy target, which is exactly what I do. I'd be just targeting that level right there. Okay, why that level? Because all these lows are higher, so it's going to be pretty easy for the algorithm to go straight through there. Okay, under here resides liquidity, and there would be a reaction. This would be support. So it doesn't mean that it's going to go there in complete reverse, but that to me is the easy target. We are already at a resistance level. You've got to go into a shorter time frame on a 4-hourly. But if I was looking at this, I would simply look at that as a rejection, and I'd want to see my 4-hourly candle remain below that midpoint. Okay, and so if we got in somewhere up there, 1.0860, this should be my initial target, 84 pips, and all I'd be doing is taking it off at 50 pips, okay, or 60 pips. To me, that would be an easy target, okay? But it requires understanding of entry techniques. What is the setup that you need to see to short this market? Do you agree with this analysis? Okay, you got to have an understanding of higher time frame analysis, which is what I'm showing you here. You got to have a way to identify some, level of target. Okay, things that I've discussed, and then what's your entry technique? What do you need to see on a lower time frame to go short on this market? Okay, so this is 4-hourly. Very, very choppy, right? I've mentioned to you, when you see these choppy moves, the market's reaching for something. On a 4-hourly chart, this gap's now fully closed. Look at the wicks, right? This is now fully closed, and you want to see on your hourly chart, 50-minute chart, some kind of short setup that you've tested and proven that's worked for you at the right time, if you agree with my analysis here, and looking for some lower objective. Okay, so the only reason I would be considering this as a short is if I would be thinking the dollar index is rising. Okay, so if you look at the dollar index as I've shown you, it looks bullish to me on a daily chart. Okay, and therefore I think that this could be coming back up at least to these two up candles, and then we can further do some analysis to determine if we continue to go higher, or do we have a pullback from that level. Okay, so that's the kind of analysis that you want to be doing using correlated markets. Okay, so we've used the dollar index that is heavily correlated with the euro to determine what we want to do on the euro based on our understanding of the dollar index. Okay, now the other pair I might look at is the Japanese yen. I know there's some heavy news coming in for the Japanese yen. And this is also, do I have any lines on here? Not really, I'll just get rid of them. I don't like to keep lines on my charts. Once my trading's over for that market, I'll take them off. So for the yen, we've taken out this liquidity, I believe. No, we haven't. So there's some equal lows there. Okay. Now, that doesn't mean we are coming down there. Okay. Certainly we might. But we've had a nice reaction from this daily rejection block. This daily? Yes, daily. Okay. Which has already come into an important fair value gap. Okay. This is a risk in the sense that these are very clean equal lows, but that doesn't mean automatically we're going to come down there. We need to trade the market the way that we see it. Right now, what I see is that this daily rejection block has been respected and we've created a swing low. What I don't like on this is that this has moved up into this fair value gap and looks like it's rejected that so far. So it's a little bit mixed for me. There is some news coming out. Okay, maybe we need to look at a weekly time frame. So weekly, we also have liquidity residing below, but we have come into this gap. So that could be support, and there's order blocks here that we've come into, okay? From previously, they're coming to this gap. So this could be a move down, up, down to stop hunt anyone that was already long. So this is a bit tricky, okay? We need to kind of see how does this trade next week. Maybe let's look at a 4-hourly chart. Yeah, I mean, it's tricky, but if I look at this exactly as I see it, it's bullish. Okay, we've come into this daily rejection block. We've made a swing low. On the weekly chart, we've come in to key support levels, okay, and we've rejected. The equal lows here are risky. On a 4-hourly, let's get a 4-hourly. I don't use these. Keep clicking it. 4-hourly. Whoops. Okay. To me, this is bullish, right? We've come down, taken liquidity, moved up, order block, and now we are sitting on top of the order block, okay? So if I were to trade this higher, I would want to see us come below this level here. So let's put a line here, okay? I kind of want to see the market remain above there, okay? Well, how many pips is that from here to here? So that's about 80 pips. So that's how I would look at this. If I were to trade this, I'd be looking for the market to continue higher. And I think we could go back up to here. Okay, 157.80. Let's just validate that on a daily. We do have, so that's pretty high. Can we get something? What's an easy target if we did go maybe back up to close this gap? That's over 200 pips. The high of this is 200 pips. I need to look at this more. I think we probably can come back up to this 157.80. I think that would be a good target. There is some risk, okay? Equal lows on the daily, equal lows on the weekly. And so on the 4-hourly is how we would manage this trade if we were to look at this. I do like this chart, okay? So I need to see more information. So long as this bullish order block holds, then this is good for higher price, okay? But there is some risk down there because of those equal lows. So the easy trade to trade the dollar index with a prognosis of the dollar index rising, let me delete these lines, there's too many lines here, okay, is the euro. Okay, so if we do in fact believe the dollar index is rising, the yen trade to trade the dollar index may be slightly risky because of the heavy news coming. We could just tap down into there. And maybe that's a better way to trade this, to wait for that liquidity to be taken, okay, with the upcoming news. So to me, it'll be a lot easier to trade the euro because that's a lot cleaner chart. Okay, so you've got to pick your trades so that it's easy. That's a clean setup, okay? That's a very clean setup. Let's look at the pound. I am bullish on the pound. We have come down into what I have said previously would be a key zone. I think we probably will still wick down into this order block, maybe even take out liquidity residing below there into this. So I'm not ready to look at this market at this point in time. I want more discount pricing. If we take the range of this for now, there's a low and there's a high. Discount pricing isn't until we get below in here because that is the midpoint. Okay, that coming down into here is okay, but I really want to see us coming into this level here. Then I'll see if I'm interested in this market, even down here. Okay, so I'm not interested in the pound at the moment. I am over the longer period bullish. I do think we'll go higher on the pound, but don't have the right setup right now. Okay, so I think that's enough for this video. My focus is on gold. Okay, that's my market of choice. That's all I'm looking for at the moment. Where I've got a lot of lines. This is all from Friday's trading, so I'm gonna get rid of all of that. Don't need any of that now. Okay, so all that's gone. I'll come up with some more markups sometime Monday. I'll look at this, see what Monday's done, and then draw up where my levels are. But as I said, this is what I'm looking for. That's what I like. Okay, I want to see this fair value gap close, 24.40. Okay, that's what I'm looking for. And I want to get good discount pricing. So any pullback for me is going to be a opportunity to seek higher prices. Okay, hope the video was useful. I will now talk with you in a future video.